Hello, fellow traders. 'Tis I, the Rumpled One. It is Friday, June the 8th, the year 2018. Let's talk trading. Weekly wrap up. Before we actually get into the weekly wrap up, I guess I must have struck a nerve with a few traders yesterday uh, with the giving yourself permission to fail. Taking that risk and being okay if you lose on any particular trade. So I'm glad that it hit home because, in fact, I read something today. It's like wounds are what let the light in, or something to that effect. And I guess what they're trying to say is that if you're wounded, if you're having a problem, difficulty, that's pretty much showing you what you have to work on. So if you take a trade and you lose, there's a couple ways to look at it. Sometimes, hey, that's just the market. But what you then have to do is you have to go back and retrace and take a really hard look. Did you follow your plan? Did you actually have the trigger, or did you rush it? Did you change your plan to make it fit what was going on in the market, as opposed to seeing if the market fits your plan? Because that's what we do sometimes. I know I'm still guilty of it. It's like, oh yeah, that looks like it. It's just like, no, you need to wait. One of the hardest things for me to do is wait for the close of the 1 hour candle. It's just really difficult. I mean, there could be a red candle, it's in the green rat zone, and oh man, I just want to jump in that trade. It's just like, no, because if you look at history, you'll see that rat zone, you'll see those red candles, you'll see a tail on the next green candle, and if you just waited to the close, you could get in and maybe you get a holo or 1, 2, 3 trade, and it makes all the difference in the world. You have very little drawdown. You see green almost immediately, and just puts a whole different spin on the trade, as opposed to you jump in early. Now you got to write it down for maybe 4 or 5 or 7 pips, and it's just like, oh man. Then it looks like it's getting near where you should stop out, and then all that stress could be alleviated if I just wait for the close of that 1 hour candle and then not jump in on the first minute. No, give it 2 or 3. Let's see what happens, because almost always price returns to that open, because if it goes up and then it goes down, what has to pass through the open? And if it goes down, then it goes up, it has to pass through the open. So if you can just wait for that let that candle close, let the next candle open, let it wiggle for a bit. Yeah, you might miss a trade or two, one that takes off, but hey, it's a lot better than going through all that drawdown. And even when you rush a trade, if you mess up everything else, just do not mess up this one right here. Do not lose more money or more percentage of your portfolio than you are willing to lose per trade. That is like the big one. Don't do that. Okay, so here we go. Yesterday we were up in here, now we're down here. You see, we're out of the wick zone. Okay, see. Well, actually, I'm sorry. We're in the wick zone. We're not out of it. We jumped into it right here. See, it was in and out, back in, out, back in. So we're just 8 pips above the weekly open here. And once again, if you tuned in at the beginning of the week and just are tuning back in now, all the gaps filled. So you Sunday/Monday traders, you should be in the money again. And we can look at the daily. You see here, it entered the body, came back into the wick zone, exited the wick zone, and then right back inside. So we know that price usually doesn't like staying in the wick zone, so chances are money to be made going short. We're coming up to the 0.50 psychological trade here. small range. We've got a few 100 pip ranges here. Let's see, we got 4 pound pairs. Got a yen pair here, a yen pair there. The Aussie and Swiss yen moving. Buy zone trade. Okay, here we go. What happened? You got a trigger here, and you got stopped out if you took that trade. Here you got a trigger long. Right there was your clue. Exit, small profit. Here you go, trigger, short, and boom, you had a nice profit. Okay, for you beginning traders, this was not a short trade, only for the experienced traders. Should have taken that trade. Why are all these on the screen? Okay, here we go. Red rat, green rat. Once again here, let me put up the H1 so you can see what I was talking about. See here, chances are I would have been really tempted to buy. You see what would have happened? I mean, it was making a new low there, made a new low there. All you had to do was wait, and all of a sudden you see green. You can see a turn trade right there, turn trade breakout at the 33 level. Yeah, you'd be up 15 pips right now. You had a much, or you could have taken almost the lion's share right there. Price went up, returned to the open, went red, boom, you're out. Yeah, there I go, John Madden again, boom. Okay, here we go, pivot trade. There's the open, there's the pivot. It got hit, good for about 11 pips. Came down to S1 and returned. So you see, a lot of these trades can be, central pivot area here. There's a pivot, there's S1. Price sometimes just moves between these pivot lines. You can see here's your weekly R1, here's your weekly pivot. So if you're like to trade the long term, here, right there was a chance to get short. Here was a chance to get long again, trading off the weekly pivot. And the simple horizontal line price action trade. Okay, what do we got? We have a one ball at the top. Okay, you would have went short. Maybe you got stopped out. Short at the line. You made some pips back. Short at the line and short at the line. And you see, then you've got your 3 ball here, green at the line. There's 20 pips or almost 30 pips, 10, 20, 30 pips to the good. Just take the money off the table. Here we go. Once again, horizontal lines using previous daily session. Green at the line, red at the line, green at the line, red at the line, green at the line, red at the line. I mean, it's right there. Some days better than others, but hey, that's just the way trading is, right? This isn't difficult. And see, didn't I just say the 50 trade to the south? Didn't I just say that? This is live, guys. This isn't, Harry hindsight. I mean, where did I call that? What screen was I on? I think it was on this screen when I called it. Price was up here, was in the wick zone. Price doesn't like staying in the wick zone. Just that simple, right? And here we have it. There's the wick zone. I said take the psychological trade. You would have been in 3 pips earlier. And it's just that simple. holo setup. There was a nice one there. Gave you a second chance here. Now that's a 50 pip trade right there. And you can see right here what happened. The red line is the peak of the bid. And you can see here the ask price came down and just came down here. Then we finally got the bid went above the valley of the ask right here. You can see it. So that pip short at 50, that was about a 6 or 7 pip trade right there. No big deal in the big scheme of things, but hey, if you can knock back, 5 or 10 of those a day, you're making some real pips. And we're using the inventory reduction bars. I just like call them the IRBs, inventory reduction bar. It's just too much to say. So the IRBs, you can see here, there was a short right here, a lot of inventory, I guess. And then you had a long trigger here and a long trigger here. Yeah, right. See, this one, that would have been your first long trigger. Then also right there. Oh, and yesterday we were talking about giving yourself permission to mess up. Well, yeah, if you noticed the video got cut off, I gave myself permission to go ahead and post it as is without the closing. And hey, you know what? That's just the way it works sometimes. Okay, this is weird. Looks like I got 2 pivots on here. Wonder why it did that. I guess something in the program needed to update. So there we go. We hit that pivot. Hit the pivot. Hit the pivot. Now remember, there was a missed pivot we were showing. Over in here. You see price, I think it was, which one was it? There was one that was down here, but obviously price, we took it out. And that's just playing those pivots. And here we go. My latest spread.trade screen, what I like to look at once I've decided, yes, I'm going to take a trade, I use this to time the entry. Also, you see this bar here, 145 price most likely will return to this level, and there's a good probability it will also return here. And sometime in the future, it may even return here. And this one, once again, it looks like I got a problem with the green bars not getting changed out. I'll have to go back in the code. So I test these things for a while. Hopefully I get them right by the time I send them to you. So maybe by the next batch or the one after, you'll get this indicator. Those of you who've donated for 2018. But this is just something that says, hey, you know what? I believe price is coming back here. Usually does. I think I showed you that a couple times this week where it did. And the monthly, big picture, looking at the monthly, I should probably move this chart over here, but maybe next week we'll rearrange charts. But remember, I told you about these levels earlier in the week. Need to focus. And this is just the Einstein indicator. You can see here when I first cranked up, how far price has moved to the south side. So anyway, fellow traders, thanks for joining me this week. Hope to see you again next week in YouTube land. And just remember, it's not what you trade, it's how you trade it. TheRumpledOne, signing off.